All right, guys, let's do a little review here. Um, it was a it was an interesting week, even though it was flat. I mean, gold was flat, silver was flat. The miners were down a little bit, but pretty much flat. But it still was a very significant week because the S&P was down, and the S&P really had a couple of 1% down days, maybe I don't know about a 2% down day. But this was really the first time since April that the S&P really kind of got knocked on the chin. We had a little bit of a rebound on Friday because they were talking about the government restarting on Friday. And so it got a bit of a rebound. It could have been a lot worse. It could have easily traded, low 66, 6,600, somewhere in there. It could have. Um, but it had a bit of a bounce on Friday. But I think that we this could be the beginning here. So we're up 14% for the year, but we're off now more than 1% from the all-time high. So 68.87 was really close to the all-time high. Um, so it's going to be interesting to see what happens here the rest of this month. But it to me, this feels like it could be rolling over here. Jarrett Goggins, he had a really good video on Thursday. It's only 7 minutes long, but he showed two charts that I thought were very significant. The first chart was the S&P, and it shows how the S&P went up there and hit 6,800. It was at the top of the channel, but that one was really, even though that was potentially the top, the other chart was the semiconductor chart, which was really fascinating in that it topped out at 101% from the bottom to the top. And the last two times that it did that, it crashed. And we're off that 102. It went up and touched the 102. It went down, and he showed the last two times, which is absolutely fascinating. The last two times that this chart had topped out, both times it was exactly 102, which is absolutely bizarre. And seems like a pretty significant omen to me. And so uh, that and the key here is I think going to be the Mag 7 and Nvidia for the rest of this month. But if they can't get their mojo back, this could be the end. Um, I'm not sure what's going to happen here. If the government restarts and the stock market gets a little bit of a rally here, that would be good for us. That would give gold and silver a chance to rally. I'd like to see gold and silver rally um, off of this correction. Uh, for instance, so gold corrected 12%. I really don't want to see it, correct much more than that. And so if we rally, then there's a possibility. For instance, if we go down to 3,700, that will be a 15% correction in gold. I really don't want to see that. So I'd like to see gold get back to 4,200 here in November before the correction comes. That way we don't go all the way down to 3,700 and we don't go all the way down to 42. So a bit of a bounce here would be nice. The government restarting, maybe that will help it. But um, the economy is really showing us that we're starting to see bad news, uh, significant bad news that we really haven't seen. For instance, the University of Michigan for November is showing a 50, 50. That's the lowest it's been. That's kind of a GFC number. 90 is what you expect when you have growth. If you go back and you look, 2017, 2018, and 2019, it was like 95, and we're at 50. So that really shows you. And if you look at the charts on a lot of these consumer companies, they're brutal. I mean, these companies are really hurting. And so something, it feels like we're really close here. Um, I don't know how much longer this stock market can linger here before it crashes. But to me, it's really starting to feel like the end is nigh. So one other thing I wanted to show you while I was sharing my screen, I posted in Twitter yesterday. Um, uh, Must own stocks, stocks that I consider must own. This one right here, posted it yesterday. And so these are the stocks that I consider, these are the stocks that I want to own. These are my buy the dip stocks. These are stocks that I wanted to make sure that I owned kind of a minimum level. So any stock on this list that I didn't, those are the ones that I'm basically, they're either on my list for buy the dip or I've already bought the dip. One thing I've done for you is I put an asterisk by the stocks that I consider extra risk. So there's only one Explorer on this whole list. There's a nice typo. But there's about 60 names on here. You can see the ones with the asterisk. Those are the ones I consider a little bit extra risk. Um, and there's about 60 names. So these are all my buy the dip. And you can see there's quite a few names on here. Um, Silver Tiger, I don't know if you guys heard, if all of you guys heard, but they got their open pit permit on Friday. So that was fantastic news, absolutely incredible news for us. I knew it was coming. I've been telling you guys that at Beaver Creek, these companies were telling us, we're getting our permits, Don, don't worry about it. And sure enough, there they are. And they were telling me Q4 or Q1, and here we are Q4. So I'm expecting um, I'm expecting all these companies in Mexico to get their permits. I'm very bullish. Then I listed some stocks that, people, whenever I post these lists, people are always telling me, well, this stock deserves to be on the list. So I included all the ones that I thought probably could make the list. These are all stocks that are kind of close. And so if you add them together, it's like over 80. Um, so I wanted to show you that. I'll stop my share there. One final thing I just want to mention on Mexico. Um, at Beaver Creek, these companies were, I mean, they had very little concern about their getting their permits. They were all of them. I mean, it was kind of shocking on how bullish they were about getting their permits. And what they explained was that Scheinbaum was just going through the motions and kind of changing her system on how to do the permitting. But don't worry, it's coming. And sure enough, that's what happened on Friday. Um, that's absolutely incredible news for because most of the big silver projects are in Mexico. You got Cordero with Discovery, you got Panuco with Vizsla, and then you got Los Ricos with Go Gold. You got Pitarrilla, but Pitarrilla is underground with Endeavor. But these big projects are all in Mexico, so that's going to really help, like the ETFs. SIL, SILJ on Monday are probably going to be up 5%, is my expectation, maybe more. It'll be interesting Monday. Who's got a macro question?
Don, question about the Supreme Court. If they were to strike down the tariffs, how do you think the miners in gold and silver would react? I think it would hit the bond market, but and probably be positive for the S&P. I don't know, but
It would be negative for the S&P because it would hurt the bond market. And
mm,
so the bond market is the most important market. It's more important than the stock market.
yeah,
So it would hurt the US deficit, it would weaken the bond market, the stock market would go down. Um,
Yeah.
Now, the irony is the stock market might go up because people are always thinking about, oh, this is great for the consumer. All these companies are going to make money. We're going to lower the cost. So it's possible the stock market could go up but under that situation. In other words, the stock market would just ignore the bond market's weakness. That's a possibility. But I think gold has to go up. Um, the bond
Yeah.
market has to weaken. It creates uncertainty. But you're right. I mean, it wouldn't be surprising if they struck it down and the stock market goes up. They're like, oh, the consumer's going to get a cut here. Prices are going to drop. This is great for the consumer. Um, So it'll be fascinating to see how that unfolds, but it's really really bad news for the bond market. But the other side of the coin is I think that Trump will be able to put most of those tariffs back on. He has
Mhm.
other methods. But it'll take him some time. He won't be able to put all the tariffs back on immediately. Um, the the rumor right now is they're going to strike it down, and usually those rumors are usually pretty accurate. Um, if they do strike it down, the Congress will be kind of playing with fire here because the bond market is the most important aspect of the economy, and they're going to be damaging the bond market. In theory, they could literally be destroying the economy because that could lead to a recession. So that's how significant this decision is. It's massive. Are they
Yeah.
really going to do that? Are they really going to rug pull the U.S. economy just because they think that Congress should make that decision and not the president? It's fascinating.
And ruling in his favor in most of the rulings, though, I think.
They
But
have
this
they,
is a different scale, though, I think.
they have, but historically, the Supreme Court has ruled in favor of precedent for Congress to
Mhm.
set the laws.
Yeah.
And so, unless there's something really substantial, substantial precedent there, um, they're going to rule for Congress. That's what they've done over and over the year historically. Now, the one thing Trump appears to have kind of overstepped his abilities to set these tariffs. Historically, this goes back to Nixon, either Nixon or Carter in the 70s. One of them put on tariffs for national security reasons, but Trump didn't use that method. He just did an executive order and he didn't include that. He didn't say this is for national security reasons. And I think the reason why he didn't do that is because that was his ace in the hole. He'll come back and he'll do that later. So he basically he kept that, he kept his ace in the hole. But what he did was, kind of unprecedented. He's using executive orders to create uh, tariff, laws and tariff precedents. So I think they might overturn it.
Sorry, Don. On that one, would the market not think, okay, we're going back to normal here? That basically, if you remove the tariffs, because a lot of the times when the market goes down recently, anyway, like I believe in cycles, so I don't really believe in this. The story is it drives it. But anyway, they use the tariffs as the excuse that the market went down. So if they remove the tariffs, does the market not go up?
It very
Just
well
maybe
could.
short term.
I just mentioned that it very well could go back up if the market thinks that this is positive for the consumer because consumers are now going to get lower cost and the consumer needs help and this will help the consumer. That could be the outcome, but the bond market's going to take it on the chin here because the deficit's going to go up and they got it. And the bond market is going to have to fill that void. So it really comes down to can the bond market, swallow, you know, swallow these tariffs? Um,
So this is getting a bit deeper then. But if the world is saying no to the tariffs, like, but the US is the only consumer, the only real consumer in the world, and if they're basically struggling, then they bring on the recession themselves. Then, if they're not willing to take it, somebody has to take it on the chin, basically. So if they're not willing to take it on the chin, then you have to take it on the chin.
well,
Would that be right?
well, the key here is the bond market is very important, and the bond market impacts the whole financial system, the whole liquidity in the financial system. It's all kind of integrated in, and so by upsetting the apple cart, if you will, you don't get a free pass here. The Supreme Court's not going to get a free pass here. If they change this, it is going to impact things. For instance, right now it's over $200 billion a year, so it's about $50 billion a quarter that the U.S. government is bringing in income, and that is going to increase the deficit, and it's going to increase interest payments. So the question is, how much of that, how impactful will that be? Um, it's going to put pressure on the Fed. It's going to put pressure on interest rates. So there's going to be fallout. There's not going to be a free pass here. Oh, we're just going to go back. We're going to lift the tariffs. Everything's going to be fine. Um,
Gold might rally because they probably have the QE ready, like to pin the rates. And I would think, the Treasury Secretary, I'm Canadian, but your Secretary is no dummy, right? Like he'll be ready. Uh, I think they're gonna have to do the QE like immediately if that happens, which could be bullish for gold.
well, it makes
And on
QE
that,
it makes QE more difficult because your deficit immediately goes up by 10%. And so, your deficit goes up by 10%, and then you're going to do QE on top of that. QE requires more money printing. So it's it's a lot of money printing, and so it creates more inflation. That's why gold will go up. It's inflationary. That $200 billion, it has to come from somewhere. It's probably going to come from money printing, which is going to cause, more inflationary pressures. So again, no free pass here. Um,
Don would
the question is how close to a breaking point are we, and will this push us over the edge? That's really the question.
Don, like the repo market's blowing up now. The unemployment is starting to like actually, as you said a few times now, is the unemployment start numbers are starting to come in. Like the recession is in now, so there's going to have to stimulate. Like Australia stimulated last week or something like that. A few countries in Europe has already done it. Like, yeah, it sort of adds up to like, oh yeah, the tariffs are gone, so now we're going to like QE comes in.
And,
But
and,
the reality is,
and
it was needed to basically stimulate the economy that was already under pressure for the last few years.
yeah. So the way things work in the U.S., you have to have before you get significant QE, if you will, you have to have a crisis. And
Yeah.
so if they did any
Exactly.
QE right now, it would be very muted. It would be very muted. It wouldn't be substantial. For instance, substantial QE would cause inflation, and we already have an inflationary problem. So anything the Fed does in the next month or two will be very muted, unless something big happens, such as a stock market crash. Other than that, it'd be very muted. But um, things are building. They're absolutely building. You mentioned some of those issues. Um, but for me, a lot of these consumer stocks, if you guys keep an eye on some of those, they're really starting to roll over substantially. Other than the Max 7, a lot of these companies, especially the consumer-oriented stocks, are under severe pressure here. They're acting like we're in a recession already. And I don't see that turning around. That's the whole issue here is the trend. The trend is really getting uglier, if you will. And just because the Fed lowered rates and they're going to lower rates again in December, that really doesn't fix the problem. It doesn't fix the consumer. And the consumer is really the problem here.
There's
Hey,
also quite a bit
Don,
of short-term noise with the shutdown as well. So I think you need to see that resolved
Excuse me?
first.
Say that again.
There's quite a bit of short-term noise with the shutdown as well, because
Yeah,
that's adding a lot of pressure to the banks at the moment with loan defaults.
yeah, absolutely. We got yeah, 1 month of shutdown is impacting the banks and the credit absolutely. So that's going to give the stock market a bit of a boost when they end that, because that's going to take a lot of some overhead, some of that pressure off.
Don, you did a piece, I think it was during the week, unless it's older, about the monetary reset before gold gets to 10,000. Um, can you talk about that? It was with Tom Rodovic. Can you talk about that a bit more?
Um, yeah, with your accent, I'm having trouble understanding. Can you say that again a little bit louder?
Um, you did a piece with Don Tom Rodovic about a monetary reset before gold gets to 10,000.
Yeah, yeah. Okay. You want me to talk about that?
Yes, please.
Yeah, so I believe that the bond market will basically start to crack when we go into a recession, and so I don't think gold's going to get to 10,000 before the bond market cracks. And so what I mean by the bond market cracking is the U.S. Treasury can only borrow so much money. So they have to borrow right now about 9, $10 trillion a year. It's unbelievable. They have to borrow $2 trillion for the deficit and another 7, $8 trillion to roll over existing debt. Um, they have to basically pay off the principal, and so they're able to do that today. But I think if you go into recession, there's going to come a point where there's just not enough liquidity in the system to come up with 8, 9, 10, $11 trillion. And I just think the bond market is going to crack. And so when it does, that's when you're going to get your reset. So when is it going to crack? I don't think it will crack in 26, but I think 27 or 28. And 27 is where I'm pointing to. So I don't think gold's going to get to 10,000 before, say, the end of 27. And so that's why I think we're going to get a reset before $10,000 gold. So I don't think we'll see $10,000 gold in the current currency. And so, and then when they do the reset, I think they're going to create a new currency and they're going to devalue the dollar. And that could end the bull market in gold. But gold will be priced in new currencies. So right now we're using dollars. So that's the reason why I do not think we'll ever see $10,000 gold. But now, if we were using euros, maybe we would see, $8,000, $9,000 euro gold. That I mean, because that they're not going to probably create a new euro, but not the dollar. But yeah, I think that once the bond market breaks, I think the easiest way to devalue the dollar is to introduce a new currency. It's by far the easiest way. Plus, if they introduce a new currency, they can go all digital, and if they go all digital, then they can monitor all transactions, which is what they want to do. So it seems like a win-win for them. They get to devalue the dollar, which is going to help them pay their debt down, and they're going to be able to monitor currencies, and then they're going to wipe out the black market, and they get to orphan the euro dollar. So it seems like it's a win-win.
And how could be gold in that scenario?
Excuse me?
How you think could be gold impact in that scenario with a new currency or
Yeah,
I don't know.
yeah. Yeah, so we if a reset comes, the people that have gold and silver, or gold and silver assets, are going to benefit because they will devalue the dollar. So if they devalue the dollar, well, it depends. The U.S. Americans are basically going to take it on the chin, because that's where the devalue of the dollar would come. But if you were holding dollars in foreign countries, then you would take it on the chin. But gold and silver are going to maintain their value. That's the reason why you hold gold and silver as an insurance. Um, so all the physical gold and physical silver, um, people are going to wish they had it. For instance, when we get a reset, if they devalue the dollar, and I think they'll devalue it by at least 30%, 30 to 50 is my guess, but at least 30. So you will wake up one day and your bank account will have 30% less value. That'll be a very ugly day. It'll create instant inflation too, overnight. If that's what they do, if that's how they choose to devalue the dollar. And for me, I mean that seems like the easiest way to do it.
You
So,
think the public gets involved like in the mania phase, like before the reset or after?
oh yeah, oh way before. I I I think the reset will be kind of after the big bull run in gold and silver and the miners. The
Mhm.
reset will come. That'll be a last. That will be after when they don't have any more choice. They don't have a choice. So we're not going to, like I said, I don't think we're going to get a reset in 26. So gold and silver are going to make a massive run before the reset occurs.
Mhm.
That's my expectation. And it's the reset comes late in the game, if you will. I I do not expect the reset before, six, seven, $8,000 gold. It'll probably be, you know, past 7,000, somewhere in there. They will not do the reset until they have to, until they're forced into it. Even though it'll be obvious way ahead of that, they'll still, hold off kind of thing. Um, because they know when they do it, it's kind of an in-game situation, in-game scenario. But I don't, unless somebody can think of another way that they can do a reset to devalue the dollar, because that's really their only option for to get a handle on the debt. Basically, they can take 30% off the debt. They can go from 40 down to, you know, under 30 trillion. But they can take a big chunk of it off just in one day.
By revaluing gold?
No, by devaluing the dollar.
Oh, okay.
Revaluing gold is not really going to help them. All that's going to do is take pressure off of the deficit for 1 year. All revaluing the dollar, revaluing gold does is it gives them some breathing room for 1 year. It gives them 1 year, I think they'll do that in 26. And so they're basically, and it's the thing that's frustrating about that whole revaluing gold is it's shenanigans. All they're going to do is it's all on paper. They're going to revalue it probably at say at the spot product price of gold, and then they're going to the Fed is going to send digital money to the Treasury to spend. That's how that's going to all go down.
I thought they might fund the sovereign wealth fund with that trillion or whatever they create.
Yeah, They could, but the bottom line is, they they need money to
Doesn't solve it.
spend. They,
It
they can
doesn't solve anything. Yeah.
right. They need money to spend. Sticking in a sovereign wealth fund doesn't do anything for them. They're going to need to buy time, and the way that they buy time is they reduce pressure on the bond market by lowering their budget deficit, which, hopefully puts some downward pressure on interest rates. I think that's what they'll do. They'll go from a $2 trillion deficit or 2.3 down to like 1.3, something like that. Oh, we got a 1.3 deficit. We're in great shape. But it's a 1 year deal. It's just giving them, they're just buying, all they're going to do is buy some time.
Yes, and avoid the inflation by revaluation the gold.
Yes, absolutely. They're going to print that money out of thin air. It's going to create inflation, and it's going to push the price of gold up. I think if they do that, I think gold will go up $500 in a month. If they revalue that gold at the spot price, because for two reasons. One, they'll show that gold is an important asset, and two, they will create inflation. So the combination of those two things will push gold up. And it'll also prove that the US is kind of in dire straits. And people will know this was just political, this was just accounting fraud, basically. All they're doing is just printing money and calling and saying they're revaluing their gold. They're not really revaluing the gold, they're just printing money. Um, that's all they're doing. It's just printing the money.
Exactly, Don. And then other countries then will want more dollars because they know how much they're printing.
No, other countries will drop their dollars because this is an important point.
I don't mean like that. Yes, they'll drop the dollar, but basically when they're looking to to do trade, they'll want more dollars for what they were going to do in the first place.
Um, yeah, or they'll want real money instead of dollars for their trade. They'll want, give me stable coins instead or something like that.
It's
Um,
basically a loss of confidence, right? They're basically the other countries will lose confidence in the dollar.
what, yeah, what people don't realize is that the reason why gold is going up is because internationally, foreign countries and foreign governments are basically tired of the inflation of US exporting inflation. And so their bonds are going down and they're like, I don't want these stinking dollars anymore. So number one, inflation of existing bonds. So bonds have basically crashed since 2020. And then in tandem with that, the US budget deficit is kind of out of control. It's kind of broken. And so we keep printing, printing, printing. We're printing $2 trillion a year. And so that is weakening the dollar more and more. So foreign countries are like, the writing's on the wall. They can see it. And they're like, I don't want to hold these dollar reserves anymore. I don't want to buy those bonds anymore because all the US is doing is inflating them. And we're losing wealth, we're losing value. It's not working. And so this is a bond story. That's the reason why gold keeps going up. It's a bond story. That's what it all is. But the mainstream media refuses to acknowledge it. Wall Street refuses to acknowledge it. They pretend they won't even talk about why gold's going up. You won't hear it. It's mind-boggling. Um, you know, so, but it's pretty obvious to me.
Hey, Don. These
Yeah.
central banks are buying gold and they push the price up. At what point do they slow down that buying? Do you have any
Yeah. When the reset comes. So yeah, there's kind of two trends that I don't, maybe three, three trends that I don't think are going to change until the reset happens. Um, One is they will continue to buy gold. That will not I do not think that will stop. The other thing that will continue is they will continue to buy fewer and fewer of our bonds. And I don't think I don't think that will stop either. And then the value of the dollar, I think the value of the dollar is really on the precipice here, where the value of the dollar when we go into recession is going to start collapsing. That's my expectation. So I think, I thought the dollar would be at 95 by the end of this year, and it's held on. I mean, it's like 99. I'm kind of surprised, but I think the dollar is the trend is down. The dollar's in trouble, and so these trends, I don't think these trends are going to change, um, and so we're heading for an outcome here, I think. I was listening today at the gym. I was listening to Doug Casey, and he's probably more pessimistic than me. He says that we're getting ready for the Greater Depression. He's very, very. I mean, he's a smart guy too. I mean, he's older than I am, and he's been monitoring this for a long, long time. And he definitely doesn't see any path for the U.S. to get through this. That we've kind of made our bed, and there's no way that we can fix this problem. It's basically a train wreck in motion here, and gold is going up because the rest of the world has kind of figured it out. They figured out that the U.S. Kind of our fiscal house, our financial house, is broken, and there's no way for us to fix it. I'm calling it the Humpty Dumpty crash, and this is going to be where when this thing starts when it breaks, there's just going to be no putting it back together again. I don't think. Casey's definitely in the same camp.
Don, on this, on the debt and everything, like, and the inflation and the currency reset and changing the currency, like in Germany, in Weimar Republic, did they not just basically, they could have introduced a new currency earlier in the 20s, like 90 from, I don't know, 1903 or whatever it was, or even before that, but they they would have. I think that, well, my thinking is that they basically didn't change it because basically they wanted to inflate the debt that had away. So basically, you can't change the currency until the debt is inflated away. That's why they had to go through the hyperinflation, and then they changed the currency, right? Is that?
Um, well, I actually haven't studied the reason, that whole period. So I don't understand it, except for an overview, if you will. But I'm not expecting hyperinflation. I really believe that the Fed recognizes that hyperinflation is too destructive. That they will basically, once they realize, and the reason, so if you go to hyperinflation, you don't have any choices, if you will. You won't be able to create a new currency. So, so I believe before hyperinflation occurs, that they will reset it. I'm not expecting hyperinflation. I just think that's not a good choice, especially if you have a solution. If you have another choice, if you have two choices, and one of the choices will actually fix the problem, why allow hyperinflation? That doesn't make sense to me.
The only way I can see it happening, like going down that route, I agree. Like, it's basically the worst possible scenario, actually, I think. But I think when you have two polar opposites on the political spectrum, like you have basically the left, who will basically, they will stop the whole world to get what they want, which they did.
If if you think about hyperinflation, if you think about America, which has been the most efficient economy on the world, so we have a really hyper efficient economy. And so, I mean, if you go to our department stores, to our grocery stores, I mean, they're basically full. They're very impressive. For people that come here from the rest of the world. So there's some of the Europe has kind of caught up with us, if you will, but America is still very impressive when it comes to economic efficiency, and so we're not going to allow that unbelievable economic system, if you will, to completely get obliterated through hyperinflation. We're not going to do that. We're going to do everything in our power, if you will, to keep the system in place. And that's the reason why they'll do the reset before hyperinflation is allowed to happen. And they're going to have the
But
choice. We either print like crazy and create hyperinflation, or we don't print like crazy and create hyperinflation. So once they realize that kind of hyperinflation is going to happen, that's when they'll do the reset. For me, it's crystal clear.
a lot of economists say that hyperinflation is the only way to get rid of your debt, though, isn't it? That's out there.
Not that's one way, but the other way is to
That's
devalue
right,
it.
with the time change. Oh, I'm an hour late. I'm not on time. I'm an hour late.
I was wondering why people. I was wondering why people we were at a small crowd, so a lot of people are thinking it's that. You can also devalue your debt by devaluing the dollar. So that's your other choice, and I think that's a much better choice than hyperinflation. And you can also do a partial default, which I think they might do that as well. So if you devalue by 30%, so and then when you get paid back, you're not getting paid back. You're only getting paid back two-thirds, right, instead of the whole deal. Um, and then if you do a haircut and say, okay, we're only going to give you back 75% of your debt, suddenly you've cut your debt in half. So
But would no one would buy bonds then, would they?
no, they wouldn't. At that point, that's the reason why you don't want to do the reset. That's the reason why it's a game changer, because at that point, you're going to have a really, really difficult time. You're blowing up the bond market at that point. It's basically a default. If you devalue, it's kind of a quasi default. And so hyperinflation is also a quasi default. And so, yeah, it's going to be unbelievable impact to the U.S. economy. We are not going to be able to maintain our standard of living. So we've been living off of debt, and then our bond market's going to break. And guess what? We have to live within our means. So we're going to get this instant inflation. Our standard of living is going to get whacked, and basically, voila, a new way of life. And it's not going to be pretty. That's what I've been telling and saying, is that Easy Street's about to end here. America's over. America's ending, and it's all about the bond market. First, you lose the economy, but then our political system is already broken. So if you lose the economy, guess what? You're not going to be able to keep the country together.
Becomes a death spiral.
It does. It becomes a doom loop for debt, and then a kind of a death spiral for the country. Absolutely.
Do you
It's
think
sad.
there will be a gold standard after the reset then? Is that what will bring the confidence back in? That the inflation will be a one-time event?
Yeah, I think that I don't think it'll be a gold standard, but I think what they're going to do, and I think that's the reason why they're bringing the stable coins in now, is I think that the stable coins are going to act like kind of a quasi, not gold standard, but it reduces inflation dramatically. And then the US, might be partially backed by gold, might be partially backed by something else, and it might not be partially backed by anything. But what the US is going to do is they're going to they're not going to have this massive budget deficit anymore, because they won't be able to. They won't be able to borrow the money. And so, yeah, and they're going to know, look, we just tried this, it didn't work. We just tried to live on debt, and look what happened. It didn't work. So we're not going to really go back to that, you know. We're not going to have a reset and then the next year we're going to have a $2 trillion deficit, right? That's not going to happen. So the new dollar, whatever they call it, um, I, I, I don't know exactly if they will back it by anything else or if they just um, kind of say, you know, we're not going to have these massive budget deficits, kind of like everybody else, kind of like the rest of the world kind of thing. The rest of the world doesn't have massive budget deficits, but they also don't have a gold-backed currency. So we just kind of get in line with the rest of the world. We're no longer the reserve currency of the world. So now we just have to kind of compete with the rest of the world. So we got to keep we basically have to get our financial house in order. But it won't work because the reset is kind of the end in New York, the New York financial system, the New York financial hub of the world. That's going to be the end of that. And so it's going to be massive, massive changes.
They could use gold-backed bonds too to lower interest rates. That would help the deficit.
Yeah, Judy Sheldon says that they're going to do that. It's a possibility.
So after the reset, with bonds rolling over, they won't be able to be rolled over. So they'll just be written off by the countries that, or the people
Well,
that own the bonds.
well, they'll pay off the principal, but they'll pay it off with the new dollar, and the new dollar will be worth less money. So, you know, it'll be an effective quasi default. But yeah, I I think I think that that's what they'll, you know, we're just speculating here, but I think that they'll pay him back in a devalued dollar and a new dollar, and then they won't pay him back at 100%. They will only pay him back at, you know, 75%. So we effectively wipe out half of the debt is kind of what I'm thinking is going to happen. Now, that's happened before historically where countries have had have had a haircut, right? You don't get the full 100% back. We've seen that before. We've seen new currencies before. So we kind of know how this plays out.
What do you think they will cut to live within the means? Will it be defense mainly?
Yeah, defense, absolutely. I think that they will cut defense all the way back from a trillion to 100 billion. I mean, I just
Hmm.
a massive, massive cut to the defense. I think they'll close all the international bases and bring everybody home because the US has been using their military as an economic weapon, not for peace around the world, not to be, you know, kind of the global policeman. It's always been about economic influence. Um, and so now that we don't need that anymore, we no longer are this global supremacy, global hegemon. So we don't need it anymore. We'll just close all the bases and bring everybody home. We really don't have any foreign enemies. China's not really our enemy. They're our economic enemy, but not our, you know, our militaristic enemy. China and Russia isn't really. We have nuclear weapons. No one's going to mess with us. We have more nuclear weapons than anybody else. We can just come home. Nobody's going to mess with us. So we don't really need to have foreign bases.
It's with the multipolar world now. You don't need all those bases anymore.
No, you don't. And as a matter of fact, once the US cuts its military budget, guess who else is going to cut theirs? China and Russia. It's like, oh, we don't have an enemy anymore. We don't need all these weapons.
Yeah.
And peace is going to break out. I actually think by 2035, I believe there will be no more wars between nations. That's my expectation.
They will devalue the currency before they start cutting.
Um, yes, they will. Yes. No, well, let's think about that. Maybe not, because I think that they might cut.
I mean, in nominal terms, not real terms.
Right, but I think that they might cut significantly like in 26, and I don't expect the reset until 27, 28. And these budgets are usually done early in the year. We usually get the budget. So the budget goes into effect in October, October 1st, and they usually set the budget like in June, so, you know, mid-year. And so I think we could see substantial cuts in 26 and 27 before the reset, before they devalue the currency. And so it's going to be interesting to see how that unravels or how they do that. If they do cut the military significantly in 27, um, probably not
Did
in
you see
26, but 27, yeah.
the Joe Rogan and Elon interview the other week?
No, I heard about it. I thought about watching it, and then I thought, if Elon says anything substantial, we'll hear about it.
He said one thing that was interesting. Joe asked him, how much could you cut the US government um,
Budget.
expenditure by? And he said 50%.
Yeah, 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 absolutely. I agree with him. We absolutely could. We don't need this massive military. We really don't. We don't have any enemies. We're
He
just,
said most of it's fraud. He said
we're,
the level of fraud in the US government is so high, you could cut
yeah,
by 50% and still provide the same level of services,
yeah.
including defense.
I agree. But as far as the military, um, we project our military power for for economic means. We don't really need it. Like I said, really don't have any enemies. You, I mean, we just want to control we want to control the world, right? Um, but there, probably our biggest threat is definitely probably Islamic terrorism because they want to take over the world too, and they're more aggressive. I don't think Russia really wants to expand to Europe, and China definitely doesn't want to expand. They just want to expand their economy. So we don't really, like I said, we don't need to spend $1 trillion on military, if you will. It's kind of insane. Um, so that's ripe for cutting, absolutely ripe. We could cut that in half tomorrow with no problem. Um,
And a lot of what they spend it on is obsolete anyway, like the aircraft carriers and stuff.
yeah, yeah, it's the technology now to take out those carriers with the hyper missiles, they can take out those carriers with no problems now.
Yeah.
So they are obsolete. Um, um, So yeah, we're gonna find out. It's kind of scary, but we can see all this coming. That's why we're in gold and silver because we know that gold and silver is gonna do really well. Okay, so been an hour on macro. We can talk a little about gold on mining stocks. So before I do a stock of the week, um, somebody wanted me to talk a little bit about African stocks and Mali and B2 gold. And so I'm gonna start there. So I've had bad luck in South Africa and East Africa, and so I what it's one of those ones once you've kind of been bitten, you don't really want to go back there. And so I'm not a big fan of Central, Southern, and Eastern Africa. I just think that they have very high risk, but Harmony Gold's in South Africa, and a lot of people have done well with it. There's a few miners that are doing fairly well in South Africa, but I won't touch them. I just, like I said, had bad luck once. I'm just not going back there. Um, I owned Jim Sinclair TRX Gold at one time. I owned it. They seem to be doing okay. They're in Tanzania, but I sold it. I'm kind of staying away from Tanzania now. Um, the only country in South Africa that I like is Namibia. I actually had a stock in Namibia that I really liked, and this is something that's going to bite one of you guys at a certain point. They sold the company to a Chinese company for an all cash deal. They basically stole the shares. So it was a 10 bagger. The Chinese go in there and they buy it for 100% premium and just steal your shares for cash.
Osino, was it?
What was the company?
Osino.
Yes, it was Osino. So I loved Osino, and Namibia is a good country. And now, boom, I got so there you go. So the Chinese, they like those African countries, and now they did the same thing to the Longcore shareholders. A Chinese company went into Longcore, another 10 bagger, and they bought it for an all cash deal. So we're going to see more of these. Um, the Chinese like to do these all cash deals, and they basically just steal your shares. And I hope they don't do that in Australia or any other place in the world. But if any company gets into a bidding war, the Chinese are going to bid the highest because they're smart. They realize that gold prices are going higher. I mean, if you look what they paid for Ascena, it was absolute steal, and what they're paying for Longcore is an absolute steal. These companies are selling at current gold prices, thinking that gold prices are going to stay at 4,000. Well, guess what? They're not. Now, so I like West Africa. Um, but there's two countries in West Africa right now that are problematic, which is Burkina Faso and Mali, and they're both under military juntas. In both of the military juntas, they don't want it, they want to stay in power. They don't want to have another election and revert back to a democracy. Especially in Burkina Faso, the guy that was the head of the military junta, he said, "I'm not going anywhere. I'm staying in power." He actually said that publicly, so that's worrisome. I think I do own one stock in Burkina Faso, which is Orezone, and other company that's there is West African Resources. I sold West African Resources because I had like a five bagger on it. I decided, I was up big, so I decided to go ahead and leave that one and stay in Orezone. So I have one stock in Burkina Faso, which is Orezone. And the problem with holding Orezone is it's probably never going to be like a 10 multiple because people are going to avoid the country. So I might get an eight, maybe a five, six, seven, eight multiple with Orezone, but I'm going to hold it because it's very cheap and it's a very good property. But that's the only one I have there. And then in Mali, the one risk with Orezone is it's a one property company, and so it's not a great situation.
Everything I made.
It's not a great situation really. Now, Mali, their military junta leader hasn't said that he's staying. I'm hoping that that they do a vote and go back to a democracy because a lot of times when they have these military junta takeovers, they usually revert back to a democracy. I'm hoping they revert back, but maybe they won't. I think I own at least two stocks in Mali. One of them for sure is B2 Gold. Now, about 50% of B2's production is in the Fekola mine. They're expecting 500,000 ounces of production at Fekola in 26, and they're a million ounce producer. So that's some significant exposure there, 50%. But I think that B2 is basically trading at a half off. So I kind of think I'm getting Fekola for free because I think the rest of them all, they're going to be a 500,000 ounce producer without Fekola. And their other 500,000 ounces is probably, worth a lot more than kind of a two or a three multiple. So if they're a 10 multiple, even if they lost that Fekola mine, which I don't think they will, I still think B2 is because, is an okay hold. I think Resolute might be in Mali because I think they are because I own Resolute as well.
Yeah, I was going to mention them.
But they're also diversified. They're not only in Mali. So I don't really like being in Mali, but I'm okay there if I have a diversified company. But I don't think I would own Mali if it was a single asset company like I own Orezone. But those are the only two countries in West Africa that I don't really like. I'm okay with Cody. I think Cody's fine. Ghana is probably my favorite place to mine in West Africa. And then you got Nigeria. Nigeria, I don't really like. I have four in Nigeria, but they're also in Cody. The problem with Nigeria is a big country. I mean, it's over 100 million people. I mean, it's really big. And they have like 50 different dialects in that country. I mean, that you talk about diversity. There is a ton of diversity in Nigeria. They have a lot of Muslims and they have a lot of Christians. And so it's basically a melting pot, but it's very fractious. It's very volatile, if you will. So I'm not really happy about being in Nigeria with Thor, but Thor's trading like a two multiple, and then they have this other project they have in Cody. It's either in Cody or in Liberia it's a really good project, and I'm okay with Liberia, and then there's a couple other countries in West Africa, and I'm okay with those. So I'm all right with. So I have Perseus Mining, and I have Endeavor Mining, and I have Thor, and those and I've Allied Gold. Um, these are really good companies, but I could get bit. I worry a little bit about having exposure to West Africa. But these companies are all like 10, they all have like 10 bagger potential, except for like maybe Endeavor Mining doesn't. Um, but I kind of want to have exposure there. I want to kind of want to have the alpha exposure. I don't want to ignore them. But I think what's going to end up happening is at a certain point, one of these countries is going to raise their royalty rates, raise their required equity holdings, and I'm probably going to get upset and just sell all my African miners. At a certain point, that's what I expect to happen. I expect to get, rug pulled, like let's say Perseus, goes down like 30% in 1 week or 1 day, and I'll just go, screw it, I'm out of here, I'll sell them all. So we are taking risk in West Africa. It's, at a certain point, it's probably going to bite us. But these are companies that are going to generate a lot of free cash flow. Oh, Galliano. I own Galliano. That's in Ghana. So I like Galliano. I actually own Nucor. Nucor is in Ghana. Um,
And Asante, isn't and
I
that in
own
Ghana too?
Asante. I own Asante. That's another one in Ghana because I like Ghana. So I have some significant exposure to West Africa. But these are companies that are all trading at really low multiples. They're going to generate a lot of cash. You don't see very many high cost companies in West Africa. And the reason why is because they're all open pit. There's a few that are underground. I also own Fortuna. Fortuna's in West Africa. They're one of the few that I think have an underground mine, but most of them are open pit. Um, and then we got Aya in Morocco, which I think is one of the safer jurisdictions. I'm okay with that. Anybody have any questions about Africa or any stocks in Africa? Okay, nobody's got a question. All right, so
Just
yeah.
a question on the B2. Do you think this is an opportunity to add at this point, or you wouldn't add at this point? The price has come down significantly in the last few days.
Yeah, I bought this dip. I mean, you had gold go down 12%. 12. You had the HUI go down 22%, I believe. So we had a
Mhm.
significant dip here. And so yeah, I definitely bought the dip. Um, I bought one new stock. I bought Black Cat. Um, I I probably shouldn't tell you guys this because I'm going to end up paying more for it. But I'm I analyzed Silverco today and on GSD, and it looks really really good as a spec bet. You're paying $100 million for a silver miner. I'm just a glutton for punishment on small silver miners, but they have a mill. It's been on care and maintenance. So this is in Mexico. It was in production from 2014 to 2022. It's 1,200 tons per day. The weakness is the grade. It's only 200 grams, so it's not a high grade mine. But I believe silver's going to $100. They don't have any debt. They only have 39 million shares fully diluted. The mining team is from Victoria Gold. I think that's strong. Eric Sprott owns 15%. The founders own 30. So it's got really strong insiders. Um, they think they're going to, it's got a 66 million ounce deposit historical, 200 grams per ton. They think that's polymetallic. So it's gold, silver, lead, zinc. Um, they think they can get it to 100 million in 26. That's impressive. If they can get it to 80, they'd be in good shape. And so if I value it as a 4 million ounce producer, I get a 20 bagger. So I'm going to buy Silverco Monday. Kind of a glutton for punishment. I can't, if I find a good 10 bagger, I can't pass it up. Um, and now I lost. Oh, you said this is a good time to buy. Absolutely a good time to buy. I was all my stocks that I listed there at the beginning of this spot podcast on Twitter. those stocks, my must-own stocks, which is about 60 stocks, I've went down that entire list and I've looked for any stock on that list that I'm underweight. And uh,
Hmm.
and I bought I 4 or 5 stocks. I had 4 or 5 of them that I bought this week that I basically was underweight. That I basically I figured I thought I was a little bit underweight. So one of them I was Maranin. I added to Maranin. I added to Asante. I added to Moneros SA. Um, and so yeah, those were stocks I just thought, they're kind of, I think they have 10 bagger upside. And so I was a little underweight. So basically I was adding shares. The only new one I added was Black Cat. I've had an eye on Black Cat for a long time, and it corrected here. So I was like, wow, I'm going to buy the dip here. Hey, Don Colley, do you own Black Cat? Do you like it?
No, I'm not coming. I was just noting that I've discovered Gareth Soloway, as you obviously know, in the long term, and he's predicting it going down another big chunk.
Oh,
Would
he
you
said,
wait for that?
yeah, he said that this is the top, and now we're going. He thinks we're going all the way to 5,200 on the S&P, and the reason why he says
No, but in terms of silver, he said he thought silver was going down to 3,700. Gold was going down to 3,700, and
yeah,
silver
that's my
42.
target too, 3,700. Yeah.
So would you wait? I mean, you haven't waited for that, or you're going to buy some more when it
Oh
goes
yeah, I
down?
buy some more. So I'm lucky in that I still have more powder, if you will. I'm in a fortunate situation where I could buy this dip and I can buy the next one.
But do you think it'll go down as much in terms of the miners? They'll go down another 20-30%.
It's hard to say, but if gold goes down to 3,700, there's going to be unbelievable buying opportunities. There's good buying opportunities here. There's a lot of 10 baggers out there still. 1911 got oversold because they had that issue with the regulator. I got kind of, I think, got oversold. B2 got oversold. Santa Cruz got oversold. So there was a lot of stocks that I thought got oversold in this
Yeah.
correction. And there were stocks that were already cheap, and they just stayed cheap. So yeah, I mean, there really isn't any pricey stocks right now. So yeah, I think this is you kind of want to buy it because even though Gareth and I both think that we're probably going to go to 3,700, there's always a possibility that we don't, right? We could trend higher here and then maybe we go back to 3,800, 39. But I think 37, 38, 39, I do expect to see that. Go a little lower, but I don't.
And will it?
When a dip comes, I buy it. I don't wait for it to go lower and try to actually absolutely time a bottom. I
But
don't.
do you think it will drag everything down another 20-30%? The
It
whole
it,
lot?
it absolutely could. It absolutely could. But I'm not going to wait for the bottom. You get
No,
a you get a 12% correction in gold, a 25, 30% correction in a lot of stocks. You got to buy that dip. That's the way I look at it. You just got to buy it and then buy the next one as well. That's kind of how I've always attacked it. You know,
yeah,
you
it's whether
you
you sell
get
it now and buy
you
it
get
back.
you get a correction, you got to buy it. You got to buy the dip, and then again, buy the next one as well. But you look at your portfolio, you look at the stocks that are underweight that are cheap. That's what I did. I looked at the stocks that I thought they were underweight, they were cheap, and I added to those. But I didn't add if stocks that I have full allocations on. If I got a full allocation on a stock, I'm not going to add to it. Some
Right.
people do that. I think that's you're trying to pick winners when you do that. I'm not trying to pick winners. I'm just making sure that my stocks that are potential winners are not underweight.
Got you. Thanks.
Sure.
Hey Don,
Very.
back to Africa. So
Yeah.
I own and really like Allied,
Yeah,
and they're having a little bit of a tiff in Mali, and they're getting ready to launch a huge producer in Ethiopia.
yeah.
What's your Have you had any experience in Ethiopia?
It's not a great jurisdiction. They've had issues. They've had civil war in the past. Different parts of the country. It definitely can flare up. It's not a great region, if you will. But I added Allied. It just they they're increasing production just about every year, and their costs are going down, and they're trading at ridiculous multiples. And so I added to it, but I recognize the risk. It's not a it's not a stock without substantial risk, but Allied is a quality company. It's not the one thing I like about Allied is if they do have a problem at a mine, they'll just go build another one. That's the way I look at it. I put Allied kind of in the same class as Perseus. I mean, really, really good company.
I've been
Yeah,
burned before Ethiopia with Sun Peak in the north of Ethiopia. I think they had like the Tigray. There was like a civil war up the north of
Yep,
Ethiopia.
yep. You're always taking risk. Yeah, Ethiopia and Nigeria, those two countries, Mali, Burkina, they can get volatile.
Sorry, what was the problem with 1911?
Um, so in August 1911 submitted to raise money in August, way back in August. And then in before it closed in October, so they submitted in August, and then I think it went live in like September or something like that. And then in October, they released some drill results. And the regulator got angry and said, you can't do that because it looked like the drill results were enticing people to buy the stock. But the irony of the whole thing, they basically made an example of them. But the irony of the whole thing was the actual price was well below the share price because the stock went up like 50% after Beaver Creek. And the deal was done before Beaver Creek. So the shareholders got rug pulled. The people that were involved in that financing, they all got rug pulled big time. So now they're going to do a new financing, and the new financing is going to be at the current price. So, so it's actually working out for the company overall. But yeah, they made an example of them. They basically said you can't do that. You can't release drill results right before a financing or when a financing's active. It was it was
Has
kind of
the company appealed that decision just to limit any liability or anything?
no, they didn't. They didn't need to appeal, and they probably shouldn't appeal. They probably should have said thank you very much, and
Right.
we'll just redo it. But
Yes.
they appealed it because they thought it was in the interest of the shareholders that participated in the financing. So they basically went to bat for the people that were in that financing and said, "We'll
Mhm.
go back," because they got rug pulled, right? And so they felt that it was their mistake. They should have never released those drill results. They thought it was their mistake, so they need to appeal this for the shareholders, right?
Mhm.
And I understand that. I probably would have appealed it too. It's like they screwed up. The company screwed up the people that participated in that financing by releasing those drill results.
Don, are you familiar with a company, South African company called Sibanye Stillwater? Does that ring a
Well,
bell with you?
of course, I I do them all. I know all the companies.
Oh, okay.
I'd follow. Yeah, I mean, there's 850 companies in my database, and any company that has a market cap over 50 million, I'm definitely going to know them. But usually everything under 20, I'm going to know them. Yeah, I've analyzed Sibanye. I know it very well. The problem with Sibanye is the location. I've had bad luck in South Africa. I think it's a distable country. I'm not going to own any stocks in South Africa. In the story. But I if they don't have any problem, the stock's probably going to do well. But it's for me, I'm just it's kind of a there's certain countries that I don't go back to. South Africa is one of them. Just I'm not gonna. I won't buy any stocks South Africa, and I won't buy any stocks in like the Russian satellite countries, like Kazakhstan, those countries. I just don't trust those countries. There's certain countries I don't trust. They're kind of like Venezuela to me. Are you guys going to buy a stock in Venezuela? No way in hell, right? There's no way in hell. So I consider South Africa and Venezuela to be on the kind of the same playing field.
Okay, thank you.
What's held
Don,
up
yeah.
really good through this is Step. What do you think about Step over in Mongolia? They look like they're doing really well through all this.
Yeah, I have no problem with Mongolia. I think Mongolia is fine. The issue with Step is I just think that their management team needs to prove themselves. I'm not a big fan. I think there's there's certain management teams that for me they need a few years under their belt to show that they know how to execute, they know how to grow the company. Um, but so I do own Step, but for me, it's a fingers crossed company. I'm just hoping that that they can execute well and they can grow the company. But it's a tough business, and these guys need to. They still have to. From as far as I'm concerned, they still need to show themselves. So they did an acquisition. They acquired another company in Mongolia, and they combined the companies, and now they're producing. I think maybe at two properties, and they're going to try to expand production. And so, yeah, we're just watching to see how they do. Definitely has potential, that's for sure. I mean, the one thing about these producers, the way that you make money is they grow production. That's how you make money. And so, let's see if Step can grow their production. If they can, then I'm going to start being a fan.
Don, you must have got out of West African Resources before late August because they've been suspended on the ASX since then.
Yeah, I didn't have it on the SX. I had it OTC, and I was able to
Okay.
sell.
Oh, okay.
Yeah, which is odd, but yeah, I got out. Um, oh, somebody wanted to know about Black Cat and or the symbol. So Black Cat is BC8 on the ACX. BC and the number 8, Black Cat 8. Silverco is SICO, SICO, SICO on the Canadian exchange. SICO. I almost didn't buy it because of the symbol name, and then I thought, uh, I can't turn this one down. This one, this one's too juicy. So I'm probably going to end up paying 5 cents more than I wanted to. Well, actually, it's trading about $2.50. So I'm probably going to have to pay 20 cents more after telling you guys. I'm going to try to buy it on the open though, so we'll see if it closes. Probably not after telling you guys. Okay, we need to do a stock of the week.
What about Argenta Silver?
The chat has been really quiet, man. We got like 5 posts in there. Okay, did somebody say Argenta Silver?
Yes.
Yeah, we don't really need to analyze it. That one's a real simple one. I can do it through my head. So Argenta is, the Frank Gustra company that he basically started. I own it. I got in early. I'm doing well. Now that was a project that was drilled it had a fairly big deposit, like 100 million ounces, by another company. I think it was Golden Minerals, and then Golden Minerals just sat on it for like 10 years and nobody did anything. And then they went in and they bought it for like $8 million. I mean, they absolutely stole this thing. And then they started the company with like a $30 million IPO. And so now they hired a geologist to be the CEO, and the geologist he's drilling, and so all they're going to do, they're drilling this year and they're going to drill next year. So all they're doing is drilling. So, but I'm hoping that they pivot to construction, pivot to scoping, pivot to, production. But that's not going to happen overnight. So this is a long-term play. Um, I don't even think we're going to get a PEA in 26. So all we're going to get is drill holes in 26, maybe a PEA in 27. So this is going to be a long-term investment. Um, and that's the problem with it. And we'll see how it goes. Okay, Don Colley wants me to do Hosjaw, so we'll do Hosjaw. I think that's a good one. It's HOC in London. They trade in the pinks in the US, which is okay because it has enough liquidity. It's one of the few in the pinks that I'm okay with. So I have it as a top 25, which is kind of crazy because it's a Mormon. So the Mormons, I have it highly rated. I'm an A minus, but 235s, 2.2 billion. So big mid tier, but needs to get to 4 billion to be a major. 500,000 shares, trading at 440. A lot of debt, 360 million, 90 million in cash. Gold and silver producer, 200,000 ounce gold producer, about a $1,700 ASIC, 1750 ASIC, 2250 break even, $1,700 margins right now, which are that's pretty darn good. So they're generating a lot of free cash flow through the gold. 8 million ounce silver producer, which is substantial, about $15 ASIC, maybe 16. Pretty good margins, $21 margins, $300. I have been growing from 8 million ounces to 9 million, and then their gold jumping substantially, 200 to 300. They have been a shark. They've done a lot of acquisitions. They've been having trouble with one of their mines in Brazil. Hopefully they'll get that straightened out. It's kind of crazy. I mean, they're trading at a 4 multiple, $500 million free cash flow. That'd pay off their debt in 1 year. Only a oh no, 9 bagger. Wow. Wow, they're cheap. But that's with a little bit of growth. But so the key here is going to be, production growth, but they're very cheap for the quality of what you're getting here. They're pretty cheap. I mean, when you can get an 8 bagger. So back in September, we got a presentation from September. These are the kind of companies I like to own because they can grow through acquisitions, and they can generate a lot of cash, and they tend to have a strong management team. The Mara Rosa project is the one we're having some trouble with. See, it says reorganization progressing well. They need to get that one fixed. The Monte de Carmel mine they acquired from Cerrado. This is a good project. And so this one's coming online. That's the reason why we have growth. So we're going to get some growth here from Monte de Carmel. We're also going to get some growth from Mara Rosa. So we got 300,000 ounce production revised for 2025. I think I have it less than that. I think I had it below that. I got it at 200. So and they're showing 391, but I don't know if this could be gold equivalent. This might be gold equivalent. $2,000 ASIC, which is a little high. Yeah, this is gold equivalent. I like to split them apart if I can. Cash 110, debt 310 debt. Not a terrible balance sheet. So they got their 110, 312. as you guys know, I always like to clean these up when I get a chance. So yeah, so I got to 8-9. So it was, what was it, 1-1? And then it was 3-10. So was it 2-10? Let's go back. Net debt, yeah. So 312 debt.
I think you got too many ones there in cash.
Well, I did it on purpose. 1, 2, 3, 4, 5, 6. It's 112, 110. It's
All right.
110, right? So that's close. You can easier to read. So balance sheet, it's kind of they're getting closer to get the balance sheet better. Upside, it's almost better. I got high as the risk level. It's multi-mine, but so they're doing. I have 800 for the fully diluted. So I'm using a future multiple of 15, which I think is good. So 76 gold, 24 silver. One thing I like about Hochschild is Hochschild likes to grow the company. They are a shark. They're always looking for growth. And that's what I like about them. Whereas Fresnillo is more of a stick in the mud, although Fresnillo just did an acquisition, but they acquired a long-term development project. They acquired Probe Gold. That project's not going to come online for like 4 years. Hochschild's a little bit more aggressive. If they acquire a project, they want it to come online within 2 to 3 years. Also, Hochschild has a really big, I think they spun it out. They had a really large low grade Vulcan, the Vulcan project. It's like 8 million ounces of gold, and they decided to spin it out. I don't know why. I guess they didn't want to pay, that didn't want to hurt their balance sheet to develop it. They basically decided it's time to develop Vulcan, and they didn't want to spend money on it. So they spun it out, but they kept like 50% of it. So, I mean, that's like 200,000 ounces of production. So here's the Mara Rosa project. So we got production. This is per quarter, I believe. Yeah. So Q3, they're down to like 10,000 ounces. They were at 30. So they need to get this back up to like 25. So it's 100,000 ounces a year, but they need to get this thing fixed. So they're currently at 40, but next year they could be back up to, back up to 180, 100,000. Heavy rain problem. This thing will get back to 80. So it's basically, they're currently about half of the production. Argentina, San Jose. So they're going to tell us the project they got from Serato. One thing I don't like about some of these Latin companies is they do a really poor job on their company presentations. Um, for instance, they didn't break out gold and silver, so I had to break it out on my own. They combined it. But when you're producing 8 million ounces of silver, and silver has all that leverage, so that's why I broke it out. So, and they're not giving us any guidance for the Monte de Carmo mine. They're also not splitting out the gold and silver.
they hedged it all, Don? Do you know?
I don't think they are. See, it's not, yeah. So this isn't a very good presentation. It's very weak. I mean, you got 27 slides. Now this was done at a this was kind of on site. So, they didn't have time to do 50 slides. But here we have, this was in August. This was a results podcast, but we don't really have a company presentation, which is kind of weak, right? I want a company presentation um, for, retail online, right? And we don't really get that. So we can see, I'm going to open this and see how many slides there are. Well, I don't know if they're gonna let me open it or not. They're gonna send it to me. Log in. Oh, this is a 1 hour presentation. PDF, 3 megs. Yeah, you see, it's very weak. I mean, a company of their size, the quality should be much, much better. Here we have Denver. This is, here they're selling the company, the Denver Gold Show. Let's see how many slides we got. 20, we got 29. Yeah, I don't think we're going to get anything new in there. So I basically have to go and dig into the financials to get the silver production. So we go into the news, results. Um, where are you? Go back to the main. So I'm looking for Q3 results, the news release. We have a presentation. I don't want the presentation. We got an annual report. Doesn't even open up. Silver. So in the presentation, they didn't even mention silver. And then well, that could be their name. I get 195 hits in their company presentation. If we go inferred, I mean, from their company presentation, you almost get the feeling that they don't even produce any silver, right? 1, 2, 3. Next. Six. Attributable. Okay. So these are the reserves. So we got one, two, we have total. So they have 30 million tons. Um, and here we have their silver equivalent, but they don't even show us the silver. Here we have 35, 49, 115, and they don't even mention it.
That's just for that mine, though, right? That's just for Mara Rosa. There's no silver. It's just a gold mine.
Right, but this one has it. These have. Oh, but that's just for Monte Rosa. I see what you say. They're not giving us a total. Growth projects, total, total, total. Oh, there's the ground total. Okay, I'm sorry. Grand total. So these are their ounces, 250,000, 250 million, 152. So yeah, other equivalent, December. That doesn't show me my silver.
You
AG,
think someone could take this private? Isn't there a big shareholder?
yeah, yeah. They've been around forever. I don't think they'll take it private.
I own this one. I like it, but it seems to underperform, like on up days.
Oh yeah, yeah. It's been an underperformer. Um, it's it. I mentioned a lot of the positives. Positive, they've been around a long time. They're a good management team. They like to grow production. They like to acquire companies, like to build them. Um, they do have very large insiders. No one's going to take them over. They like to pay dividends. There's a lot of good things, but the negatives are they do a really poor job on their company presentation, as you just saw. It's really hard to get a handle. I had to dig. When I analyze Hochschild, it takes me long. It takes me a while because I got to go and figure out how much gold they're producing, how much silver they're producing, um, uh,
You know,
what their costs
Don,
are, and yeah,
um, I noted in the thread that I maintain under main, the comparables thread, I post a lot of the X posts, the Twitter posts. I've been posting them through the years,
yeah,
and there is one that has silver production from Miner Deck. Okay, that I posted it back in August,
okay,
and Hawkshield is down toward the bottom, just above Mag Silver. So I'm just pointing that out that people, if they're not familiar with it, they can go there and look at the comparable um, data for the companies. And as you were talking, I did look to see if I had posted. The other thing I like to do is go through their presentations and see what they say, how they compare themselves to other companies.
right.
And that one had no entry. So you're right, the presentation was lacking. I didn't find anything for them.
Yeah, very, very poor presentation for a company of their size, $2 billion. Um, uh, but there are very few silver, miners out there. So I'm expecting them to do well. It's kind of those kind of the rising tide thing. They will generate a lot of cash. At a certain point, their multiple will expand. Um, but it's not an exciting company at the moment. Um, I'm actually shocked that they don't even talk about the Vulcan spinout. Let's go back to the Vulcan spinout real quickly. I was trying to find their news or silver. That's frustrating. Stability approach. Huh. How come I cannot find? their news releases. I guess I can go I can just go to Google and do a look. Uh, Vulcan spin out child. So this was in September. Look at this crazy thing. They want me to complete the puzzle. Oh,
Slide the slider. There you go. Yep.
gosh, what a joke, huh? Solved. All right. So this Vulcan project's like 8 million ounces, and they're going to spin it out into a new company called Turning Gold. Well, they were going to sell it to Turning Gold, but they were going to keep a bunch of it. So Hochschild's going to own 87% of the combined company. So they basically are going to have this company develop and build it, and then they'll buy this company back because they're going to own 87% of it. Which, that way it doesn't in fact impact them. So that's the story on that one. But the one thing, that we have to keep an eye on, let's let's go to Grok real quick and ask, because Grok's pretty good at this. Uh, can you tell me how much gold and silver Hochschild produced last quarter? So I have Hochschild at 8 million ounces, and it's showing here that it's producing 9. And I have them at 200,000 ounces, and it's showing here that it's producing more than that. Wow, a lot more than that.
Yeah, I don't know where minor
Including
deck.
Mara Rosa, right there. So
Yeah.
if you take that out,
Excuse me?
isn't Mara Rosa the mine that they've got problems with?
Right, but they are producing at Mara Rosa. This is correct. This is for the quarter. They're producing like 35,000 ounces, 30 to 40,000 ounces for the year at Mara Rosa when they should be producing 90,000. So this 4,000 is actually accurate. So what I'm showing, this is 230 annually, and this is 9. So I'm actually, if we go to GSD, I'm using 208 million. So I'm actually understating their actual production. So I'm being conservative. So my 500 million free cash flow, this is probably fairly accurate. So if we look at the last time that I updated it, June. So I updated that in June. I haven't updated this one in a year, but it's still accurate. So they are an 8 million ounce producer of silver, which is pretty darn good. I mean, there's not very many 8 million ounce producers in the world, right? That call themselves silver miners. Now, if we look at revenue, if we go back to Grok, and we ask it, how much revenue for gold and silver separately? I think it's seven. They said it was like 70, 75, 25 is what we're expecting here. Um, They didn't do percentage basis for me. 100. Oh, here we go. No, that's not percentage. Uh, percentage. Percent. One last question, and we'll move on. Okay, so they're currently 65 gold, 34 silver. That's significant. And silver is going to outperform gold, but their gold production is going to go up. So it's kind of misleading, right? Because gold's going to go up and silver probably won't go up much. But you can see, as of now, Hochschild is a significant silver producer. And if silver prices go north of 100 million, they're going to generate a lot of free cash flow from that 8 million ounces. So it prints as an 8-bagger. I think we can expect a 5-bagger. I really do. And we might get more if they do an acquisition.
Thanks for that.
Sure. Does anybody own Hochschild, and what do you think of the stock?
Yeah, I own all of
I
them,
own it.
Don.
You guys like it?
It's lowest
Well,
on mine. I have it. It's the least of my silver holdings in that category.
Okay.
Avino is at the top. Andean, America's Gold and Silver, Endeavor, Discovery, Santa Cruz, Silver Core, Aya. Actually, some of these I probably should move up the food chain. But yeah, I've had them for years.
Yeah. I consider it a must own just because there's so few silver producers with market caps over 100 million. Um, we just don't know um, how high the price of silver is going to go. So let's say silver goes to $200, and we can discuss this because I think silver has a good chance of getting to 200. So let's say silver goes to 200. Let's take a look at Hochschild. That's the beautiful thing about my website is that we can run a what if analysis. So we can go to Hochschild and open up the share forecast tool and throw in 200, throw $200 silver. And we'll even, I'll back, I'll go 8.85. I won't even, I think 8.5 instead of 2. And we'll take the cost up to say 34. Let's go 35. Production of silver, I think it's going to go up because they have Monte Carlo is going to come online. We'll go 250 on gold. And we're going to, if silver's going to 200, that means $6,000 gold. So that would be over 3% silver, but we're going to say it happens. And we're going to take their cost up to say 2,500. Now the multiple I think is good. This is going to be stunning. 14 bagger. So this is why I want to own stocks like Hochschild because it has this kind of leverage. Now it definitely now we might not get to $200 silver. Maybe we only get to 150. We still have an 11 bagger. So I want to hold these stocks just for that kind of leverage. If things go, if we get those kind of prices, I actually think 150 to 200 is kind of in play. If you get to $6,000 gold, I think these numbers are actually in play here. So
Don,
yeah.
how do you do with 75 and $80 silver? Do you remember the other days?
Yeah,
The
you want
the unobtainable silver or the government intervention at 75, $80, $90, I don't know.
yeah, they probably could, but that's going to be short-lived. They'll push it down, then it'll bounce and it'll take off again. In other words, they can only push gold down once, maybe twice. I'm going to stop my share here. Now we can talk about government intervention. Um, I believe that they will when there's a silver shortage, I expect the government or governments to intervene in the markets and provide help for all the fabricators that can't find any silver. But um, now the first one is they'll probably close the ETFs, and that'll push silver down 10 or $20, and then they'll start selling that silver to the fabricators. But that silver will go to the fabricators. But what about the rest of the silver inventory out there, right? The rest of the silver inventory, that silver in the ETFs, yes, it'll go to the ETF. It probably will go only to the fabricators. They'll probably, tell the ETFs you can only sell it to the fabricators or whatever. Um, but the rest of the inventory that's out there, that'll be, open season for everybody else. And so if you have a shortage, it's going to be really difficult for that shortage to go away as if the investors are still buying, if you will, because this is a global thing. Silver's global. So they can't shut it off globally. All they can do is say, okay, we'll go find some inventory for the fabricators. Okay, we found you inventory. You got enough inventory for 2 or 3 years. But again, what about us, right? We're going to keep buying. So once you have a shortage, it's going to be really difficult to, you know, to get the inventories up again. So it's kind of a one and done thing. And so that would be the first move. So basically, they say, okay, we got 1 billion ounces, and now we're in the ETFs. Now we're going to give that all to the fabricators. Fine, but uh, the investors are going to keep buying. So the second thing that they will do, so that would be step number one. Step number one would be outlaw the ETFs. The second thing that they could do is they could basically say, okay, in the G7 nations, you can no longer buy retail silver. It's a critical mineral. So if you live in a G7 nation, if you live in US or Canada or Australia, you can no longer buy silver. It's a critical mineral. If they did that, the price of silver would actually crash. I think that they could push it down. I mean, who knows? They could push it down, you know, significantly, right? At that point, India and China would, they would start buying silver, um, and potentially could start pushing the price back up again. But that's kind of my worst fear, that they do kind of those back to back, and we have to wait. We'd have to wait for the price to start going back up again. Um, but it's a global market, so that they can only do so much to control the price and to push the price down. Um, but those are the two heavyweight things they can do, though, is empty the ETFs and then make it where the retail market we couldn't buy silver. All we could do is sell it. So
Yeah, because it changed everything. If you can hold your miners and your silver until the price get to 200?
Um,
Is different if you can if you need to exit at 75 or $80.
I think you want to. So I believe we're going to see a lot of volatility. And I just gave you two examples of severe volatility, right? Severe, where we could see silver price go down 20 to 30% in a day. So the possibility of severe volatility is going to be there. So if that's the case, then we want to take profits to the top. We don't want to wait until $125 silver to make our first sell. I will sell from $75 onward. 75 is that's kind of where I'll start. I don't think I'll sell any silver miners before we get to 75. That's kind of my expectation. So 75, 85, 95, kind of like that. And I don't know how aggressive I'll sell. Um, but I expect to sell a little bit, 75, 85, 95, 105, kind of like that. Um, and then 125, I might sell aggressively. I'm probably going to sell too early. I mean, we get the 150 silver, I might sell the rest of my silver miners, which might be a mistake because we might go from 150 to 200 in 3 months after that, right? Um, but I'm a big fan of the belief that silver is going to be at least 2% of gold, at least 2%. So at $5,000 gold, at 2%, that's $100 silver. At $4,500 gold, at 2%, you have $90 silver. So I'm expecting maybe we don't get to 2% at 4,500. So at $4,500 gold, I'm expecting silver to be at least 75. And then it'll keep creeping up. We will get to 2% minimum. And I think there's a really good chance we could get to 3%. So if you get to, I can do the math here on this, but if you get to $6,000 gold and you get to 3%, that's 180 gold. And I don't think that's crazy talk. And if we only get to I think we're going to $6,000 gold. So we go to 6,000 gold and we go 2.5, that's $150 silver. So I think where we're heading here is $6,000 minimum gold, 150 minimum silver. Those are kind of my minimum targets. And we could go a lot higher than that. Anybody think that those are too high? Those are too high?
No, I just think that you have to compare it to whatever you have to pay for things when it gets to that level. So if it gets to $100, what are you paying for a gallon of gas?
I think it's, sorry to interrupt, Moldy. I don't think that we're going to have much inflation between now and that outcome. I think we're going to go to $6,000 gold fairly quickly without inflation. I don't think we're going to have hyperinflation. And I don't think inflation's really going to bust out before we see those numbers.
Hmm.
That's the thing that's going to blow people's minds is that gold and silver are going to be ripping because investors are running for a place to hide because the stock market is down and those investments are absolutely outperforming everything else.
Okay.
So I think we're going to see these massive returns without high inflation. I really don't think we're going to get high inflation until 27. I don't think we're going to get high inflation in 26. I mean, it's possible. And the reason why I don't think we're going to get high inflation in 26 is because I don't think the Fed is they're going to be very cautious on printing money too quickly because if they print too much, they're going to create inflation. And so they're going to be cautious. They're not just going to, print 4 trillion, $5 trillion. After fighting inflation for 3 years and they're just going to print 5 trillion, that doesn't make any sense. so they're going to be cautious. And so I think inflation will be somewhat subdued. Plus, we're going to have a recession. So oil's going to have a hard time getting to, like 110. I think oil is going to break out in 2027. That's when they're going to start printing more. And we're going to have more inflation. I think we'll have more inflation in 27. But by then, I think the miners are going to be in gold and silver are going to be ripping higher. I mean, we could have 150 silver next year. I mean, that's what Michael Oliver's saying. Um,
Right. Yeah, I've heard him say that.
we can have 150 silver next year. That
Right.
you're not going to get inflation exploding in the next 12 months.
That's true. Okay. So it's a
So,
window of opportunity right now that we're
Absolutely.
right.
Massive. Massive.
uh, so
Massive.
Don, after you start selling, what's next for you?
What am I going to buy
Uh,
next?
yeah, what are you going to do with your cash?
I've showed this several times. I'll share my screen. Um, I have ideas, I'll wait till I cross the Rubicon on that. Um, one second. Yeah, we can talk about this. Let's see. Yeah. All right, here we go. Share desktop, share. So these are my ideas, I don't have fiat on here, but I'll definitely hold some fiat. But as a percentage, it's not going to be, 5% at most for fiat. Is probably what I'll probably do. So I have gold, crypto, emerging market ETFs. So this would be like Indonesia, Thailand, Vietnam, emerging market bonds, maybe Brazil, um, maybe Thailand. I don't know, Vietnam, farming REITs, water REITs, food ETF, commodity ETF, dividend ETF. Um, but I don't know if I do a dividend ETF in the US. I don't trust it. Um, so I don't know. I don't know if I'll find one of these. But these are my ideas. But I'm not going to be trying to make money. This is all about just maintaining my wealth. Um, uh, Now I have been a stacker of silver, but I don't plan. I'm not going to buy any more silver. So, but the silver that I own, I'm going to keep. I'm not planning to spend it. That's like a piggy bank, right? That's just going to stay there. That's the plan. The plan is that I'm not going to sell the silver. And then I'll probably add some gold to it. I currently don't own any gold, so I plan to buy some gold. That's so. Anybody have any ideas that should be on my list that I don't have on my list?
Land with
Team
more
Rusher
silver.
say that Uzbekistan is a great place to look right now.
Uzbekistan is a good place for what?
It's a good place to look as an emerging market.
Oh, investing. Um, the, the Russian satellite countries have always made me nervous. I know Jim Rogers likes it, which is interesting, but those countries have always made me nervous. I just feel like there's a lot of corruption there.
Yeah, he likes Russia, so need to
Yeah,
be cautious.
yeah. I like Vietnam, and Indonesia and Thailand. Those three countries are definitely interesting to me, especially Vietnam. I think Vietnam is a growing economy. Um, I think it's going to keep growing. I think Thailand should be okay. And so Indonesia, those three. I like Brazil, but Brazil, their political system, they tend to be having a lot of problems politically. Um, if Brazil could, have a moderate government, like kind of like what Bolivia just introduced, Brazil would be a great country. They can't seem to keep it together. Melee in Argentina, if he can keep moving it towards, moderation. I mean, that's what these emerging market countries need to be. They need to get away from the right and the left and get in the middle and be moderate. Even the U.S. needs to find a way to get to the middle, but it's too late. The U.S. we're off the rails. But you got to get in the middle. You got to be in the moderate, and everybody needs to talk to each other, and everybody needs to say the people on the left and the right, they have to basically be ignored, if you will. They got to be marginalized. If you don't marginalize the left and the right, you're gonna have a mess. Somebody likes Vietnam. All right, Roberto. Yeah, like Vietnam. I like to visit there.
Agricultural land, maybe, Don.
Yeah, agriculture. I, I I think food prices are going to go a lot higher. The one thing I didn't put on that list is commodities, but I think a commodity ETF might make sense. Michael Oliver, he's very, very bullish on commodities trending higher starting now for the next few years, and I think he's right. I think commodities are absolutely going to go higher, and I think the one of the main reasons why is because the dollar is going to crash. Even though the economies of the world are all going to slow down, but if the dollar goes down 25%, then commodities will go up 25% because we haven't switched over yet to producing these commodities in other currencies, and we haven't switched over yet where people are buying these commodities in other currencies. I was just reading about a month ago that China, they told Glencore in Australia that they were no longer going to buy their iron in U.S. dollars. That was fascinating. So the rest of the world is starting to move away from the dollar to buy these commodities, to buy oil, to buy food, and I think that's going to speed up.
That was BHP in Rio, I think. A third of the spot's going to be bought in Chinese currency.
Yeah, yeah. Okay, so I got the wrong. Thanks, got the wrong company.
Uh, yeah, I'm from Australia, so
Yeah, BHP. Yeah. Um, yeah, that was big news, wasn't it?
yep. Not as big as, yeah, not overly publicized, but yeah, it made a bit of rounds, but yeah, people don't comprehend what it means really.
Could be the start of something, right?
We've already got India buying crude in Chinese yuan.
Yeah, slowly at first and then all at once, right?
Oh, this is one of the things that they've speculated is that China's going to place gold vaults around the world and then use gold for settlement of excess trade deficits.
Yeah, yeah. Andy Schectman talks about it a lot. I'm not so sure. That's one possibility, but I actually think what's instead of settling in gold, I think the easier solution, if you will, is to trade in some type of a stable coin, and then that stable coin is convertible into your currency. That to me is a much better system.
I think the plan wasn't settlement of trade in gold. It's that if you accumulate excessive reserves in Chinese yuan from your trade, you could then convert that into gold held within these vaults. So
Yeah,
settlement will happen maybe in a digital currency. That's fine. but for long-term reserves, you can freely convert those into gold.
Right. But just the whole aspect of having to have physical gold there and convert it to gold and transferring the gold, that whole aspect is messy. And you would only do that if it was your only choice. And so they're looking at it right now because they basically say, well, this will work. And that's a system that, they're kind of leaning towards, if you will, because stable coins are not possible yet. They don't exist. Other than Tether internationally, but nobody trusts Tether. And so I think what's going to come for the BRIC nations is they're going, and this is what India has been pushing back against, is I think that they're going to end up creating some type of a stable coin that they trade with. And once that happens, you don't need gold anymore. Because if you can do international trade with a stable coin that's convertible, then it solves all your problems. But the problem is India doesn't want it, and so India and the way that this BRIC organization was created is everybody kind of has veto power. They kind of all have to agree on kind of these economic policies. And so India is an importer, and the exporters are like, we're like this. And so India's currency will be basically impacted negatively. And so India's basically been, holding that all back. But I think eventually they won't be able to prevent it. Eventually, a stable coin, especially if we start using stable coins more, the more we start using stable coins, and that hasn't happened yet, but the more we start using them, it becomes the perfect, international trade currency. For instance, Tether would work if you trusted it. Um, and so,
If you trusted it, that's the big
yeah,
thing, right?
yeah, if you trusted it, and currently we don't. So I think that we need a Tether-like stable coin that's created by the BRICS nations that they trust. Once that happens, you don't need to settle in gold.
Well, no, the problem is, right? Let's say they create a BRICS coin, call it
Right,
what you will. What's it going
right.
to be backed by? The BRICS
It-
nations don't want to
it's
hold
easy.
currency of the other BRICS nations.
I
It needs
get,
to be backed
yeah.
by something, and
I,
it
I,
will be backed, I believe, in the end by gold.
It's right. Well, not completely, but partially. It's easy to back a stable coin. Tether and Circle are perfect examples. It's easy peasy. You just choose what you want to back it by. You can back it by gold. You can back it by silver. You can buy it back the U.S. Treasuries. You can buy it by, you know,
But
it,
the only thing they're going to trust is gold.
no,
Correct.
no, not necessarily. The key here is stability. Now, gold isn't a stable coin. Gold appreciates in value. So you don't need to back it 100%
That's the premise is that gold, it is the one fundamental uh, value, not, sorry, the one fundamental uh, money that does not devalue over time. I mean,
Absolutely,
that's been
absolutely. But you don't, right. But you don't want to spend gold. So you don't back it 100%. We've all learned that lesson. You buy gold, you hold gold. So you wouldn't back it 1-to-1 with gold. If that was a solution, they would have already done it. But stable coins, um, are easy to back. You just have to choose what you're going to back them by. And all you're trying to do with a stable coin now, currently, what they're doing with stable coins, and I think this is not going to be how we go forward, is they're trying to make them stable to the U.S. dollar, which I think is kind of ridiculous. But the reason why they're doing them against the U.S. dollar is because the U.S. dollar is the global reserve currency. So it's kind of the bot the common denominator, if you will. So Tether and Circle are both backed by are pegged to the dollar, right? But you don't have to peg it to the dollar. That's just one way to create a stable coin. You could peg it to a basket of currencies, right? You could peg it to the
But they're all fiat. They're all fiat. They're not.
exactly. But
None of them are better than the dollar, and the dollar's devaluing. I
right,
mean,
right. But you're moving away from the dollar. So we're talking in terms of creating a stable. I want to create a BRICS stable coin that they use, right? So if they use that, they don't have to peg it to the dollar. They want to get away from the dollar, right? So what they do is they create a basket of currencies. Let's say they use 10 currencies, right? And then those 10 currencies are 65% of the back coin, right? Then they create a basket of 10 and it's only 65%. Then they put 10% gold, 10% silver, 10% copper, 10%, cotton, right? And then that becomes their stable coin. And it's a basket. So the dollar's gone. At that point, the dollar's irrelevant. It's gone. You see what I mean? But the problem, you can do that. It's easy to do something like that. The problem is India. If you create this stablecoin that I'm saying that can be done easily, India has to buy that stablecoin. Their currency isn't as strong as the stablecoin because they're an importing nation. So if they're an importing nation, there's nothing to really hold up their currency. What holds up your currency is wealth. You got to generate wealth.
which is China, isn't it?
Yeah, yeah,
China
exactly.
with gold backing rather
So
than.
China will have no problem. They'll basically get that currency, whatever currency they're used, they'll get paid in that currency. So they don't have to buy it, right? They don't have to buy it, they get it. That's the problem is that India is holding this whole thing up. But eventually India will get, they'll get run over because eventually someone's going to create a stable coin. Maybe the BRICS nation don't do it. But somebody's going to do it. I call it the Libra coin. Nobody's created the Libra coin, and if you create the Libra coin, the dollar goes bye bye because the dollar is just one piece of it. It's irrelevant. The dollar's irrelevant after that, and it's just a matter of time before somebody does it. And then once somebody does it, the BRICS nations, it's Grisham's law. Eventually, they'll push out the bad money and the good stable coins will be left. That'll be what's left standing. And that's what people will use. I keep waiting for it to happen. It hasn't happened yet. The Libra coin is a brilliant idea. It's basically Tether without the risk, if you will. But
Don, do you think crypto, or Ether and Bitcoin are leading the market down?
yeah, it's a very good chance that gold and Bitcoin both led the market down. We'll know by the end of the month, but I think so. I think that gold and Bitcoin both led the market down because Bitcoin was like 120 and gold was like 43.50, and they both lost 10%. And I think that was the beginning of the sell-off, and we'll know by the end of the month. But yeah, I do.
Hey, Don, Rick Rule says that in the next 10 years, dollar is going to lose 75% of its value.
Yeah, I
Do you
agree.
agree to that? Sorry?
I agree.
And in that case, gold should like triple its price from the current price, right? Like it's
Without a
4,000.
reset, correct. Without a reset, that would happen. But I think there'll be a reset. That's why people like Pierre Lassonde says gold's going to $17,000, and other people have said 20, 25. That would have happened. That will happen. But that's without the reset. If you have a reset, then you never get to those levels.
So reset as in like, will the government default the bondholders or like
Yeah,
like
we've been talking about that. I think that they will do a quasi default, not 100% default. And they'll do a quasi default by devaluing the dollar and then possibly making bondholders have a haircut. That's my expectation. And we don't know when that reset comes, we don't know how the global what we'll use for money going forward and how the global financial system will, rebalance itself and how gold, is utilized. But I think stable coins are going to make gold somewhat irrelevant because I think what's going to happen with gold is only going to be a small portion of the stable coin. So if gold is a small portion of the stable coin, it becomes somewhat irrelevant because it becomes part of the currency. So you no longer need gold anymore.
Yeah, but if the bondholders are not paid, then it will lead to a financial crisis bigger than 2008, right?
Absolutely.
Because, I mean,
Much bigger, much bigger. The U.S. government is going to default on its debt. That's much bigger than 2008. 2008, we fixed the problem in what, 3 months? By June of 2009, the recession was over. And they didn't even really start to fix it until like March. So yeah, yeah. We're not. I call this the Humpty Dumpty crash. When this thing breaks, we're not fixing it.
Well, they didn't fix it. They just kicked the can down the road to now, right?
No, they fixed it in the fact that the recession was over. This
Yeah.
time, this time the recession is not going to end. It's going to be it's going to linger. It's going to get bad. It's going to go. You won't be able to find a new. If you lose your job, there's going to be winners and losers, absolutely. But if you lose your job, good luck finding a new one. It's going to be that. It's going to be awful. People will not be able to replace their jobs. There'll be no jobs. I remember in 19, let's see, was it 2000, 99, 2000, we had the dot-com bubble bust. There was 100,000 IT employees in Colorado that were unemployed. 100,000. So if you tried to find a new job, there was like 100 resumes ahead of you. This is impossible. That's what's going to happen. 100,000 resumes for a job. And all 100,000 people are qualified. I mean, well, maybe not 100,000, but there's 100,000 people unemployed. So you go to apply, there's 100 people that are qualified for the job. 100. What chance do you have if there's 100 people qualified? You got a 1% chance of getting the job. That's kind of what's coming.
so what do you suggest, Don, that people hold gold mining shares to survive? I mean, like, I'm just trying to be practical here. Like, what do you think people should do?
Yeah, yeah. So you need to think about, financial security, absolutely. I mean, that's the reason why we're in gold and silver. We're kind of trying to get ahead of it a little bit. So when all this stuff breaks, that we're working on our financial security to get ahead of the curve. The other thing that you should do is definitely, if you can't afford it, to put stuff in storage. So when the supply chains break, that you basically you're ahead of the curve there. The other thing you should do is start learning how to grow food. Think about um, you know growing food at home, absolutely, because that's going to be a major trend here coming up, where people start um, people are growing their own food. And think about where you're going to live. If you live in a big city, where you're going to move to. Where am I going to be? Is this a good place to be to live? Because the big cities are going to be a total mess. Um, think about having a way to generate money through the internet. Have a somehow, if you can figure that out, where you have a stream, an income. If you can generate some type of an income stream using the internet, because the internet's going to be massive for that. So you need to think about that. Um, think about the entire financial system basically kind of going bye-bye and getting reset, if you will. Like the whole New York financial system will probably go bye-bye. Think about that. That's how severe this change is going to be.
And on our mid tiers will eventually become majors that will basically give us our dividends. That's what I'm thinking anyway.
Well, yeah, but this is a short-term trade. I mean, yeah, the dividends we will get paid dividends, but we're not going to hold these stocks for more than three, I don't think them for more than 3 or 4 years. So, this isn't a long-term thing where you can buy Chevron and get paid, a dividend for 20 years. People have been living on the Chevron dividend for, 20 years. We're not going to be able to do that. For instance, I get paid a high dividend for Agnico Eagle, but you know, I I'm not going to hold Agnico Eagle just for the dividend. I'm going to sell it. So this is more of a capital gains trade. Um, any dividends you get will be okay, but that we're not here for the dividends.
Gotcha.
Mining's cyclical, so it doesn't matter if it's gold or other commodities. I mean, you never look at holding them long term.
It's absolutely cyclical, and you have to recognize that this is going to end. This bull market will end, absolutely. And you got to think about that. When is it going to end? I think it's going to end when the reset happens. And that could happen in 27, but I'm probably 28. So you have to think about that. Um, I think
I mean,
6,000 gold. I think 6,000 gold is coming. I think that's kind of the minimum. So I'm thinking six, seven, eight. So you have to start thinking about exiting somewhere between 6 and 8,000 is my expectation. And I think where we're really going to make our money is from $5,000 gold to $6,000 gold.